Good morning, everybody. My name's Sue Nelson, and I work at Rift Accounting. We're at stand something, 221 I think it is, over there. I started my first limited company when I was 24. I'm afraid to say that was in like 1985, 1986. And the question is, why did I do that? So you might think it's a really stupid thing to do. I should have been frightened, and I should have been wary, and I should have relied on my salary. But if you're not happy being a wage slave, you can't keep on doing it, and you just have to start your own business. And it's all about passion. So if you're dreaming about your business all the time, and you're thinking about it all the time, and it's something you're burning and desperate to do, I know exactly how that feels. And at some point, you're going to have to make the leap and do it. So for me, I sort of had a little dream about it, but it was also about context and role models. And I was looking at other things that were going on, and those were the things that inspired me. So at that particular time, it was the days of only fools and horses. So there was Trotters Independent Traders. You know that very well, surely. And it was that sort of phrase, Rodney, this time next year we're going to be millionaires. And my uncle did actually have one of those phones that was the size of a brick. And then famous entrepreneurs at the time were just a few years ahead of me. So those were people like Bill Gates and Steve Jobs and Alan Sugar, Anita Roddick, people like that. And I found those people very inspiring, because actually they seemed fairly ordinary, but they were doing something extraordinary. The big film at the time, if anybody's seen it, was Wall Street with Gordon Gekko and the money-grabbing character. If any of you are already running your own business, that line, lunch is for wimps, certainly hits true when you're very, very busy with your own business. At the time, there were lots of state monopolies being turned private, and so many of us became shareholders for the first time because we could. And believe it or not, if you're sort of under 30, you won't believe this, but believe it or not, if you could buy your own council house for about a tenner then, and actually you could buy a house for 0% deposit, would you believe? So lots of us became shareholders and lots of us became owners of property. So it's that background and that context for me that became my sort of inspiration. And then one final thing pushed me over the edge to start my business, and you'll all have the same story. There's one final thing that made me do it. And I went to visit my aunt, and she's my godmother actually, and she asked me to meet her at work, and I can't remember why. And I went to go and see her, and she looked really smart, she looked really in control, and she really looked like she was the boss. And in fact, she was the boss. And that was it for me. That was it. I'm going to do this. I'm going to make this leap. So everybody's got a story. Everybody's got an inspiration. And to be honest, now it's much easier. I've just been talking to James, I think it is, and he's saying it's actually not that easy to open a bank account and do those things. But anyway, if we ignore those bits, it actually is much easier to start a business now. With the internet, with computers, there are absolutely no barriers to what you can do. The money barriers have dropped away quite considerably. You could sell your stuff worldwide, sitting in your underpants in your bedroom tomorrow morning if you wanted to. You could do that if you wanted to a complete worldwide audience. And the fact is that there are 4.8 million small businesses out there, and they're employing 14.4 million people. Their turnover is around £1.6 trillion. It is not Tesco's, it is not BP who drive the economy. They are not the ones who provide employment. It's small businesses and it's small business owners, and they are the ones who are the heroes, not these people you see on television. It's the small business owners. But what we're talking about today is small businesses can fail. So what I want to do today is talk to you about all the things you need to get in place to try and minimise that risk, because that's probably the thing that's stopping you. There's 4 common reasons for failure for a business. And if you go onto the riftaccounting.com website, All of this is written down for you. There's loads and loads of guides in nice plain English, which we hope you can understand very easily. So if you just want to listen today, all of what I'm going to say today is on that website. So, 4 key mistakes. First of all, you can't sell your stuff. That's one of the key mistakes. Are you sure that what you're going to do is what people want to buy? So test it, ask your friends, ask your family, do that first. The second is you've got to know where you are financially. You have to know that. If you don't, you are going to get yourself into all sorts of trouble. You're going to not know how much money you've got in the bank. You're not going to know if you're making a profit. So make sure you know where you are financially. And the other thing is concentrate on profit and not turnover. Much better to have a £100,000 profit on a £250,000 turnover than a 10p profit on a £1 million turnover. So one's much riskier than the other. So concentrate on your profit. Also, my boss is over there, Jan, who's been doing this since 1999, and she could tell you everything you want to know about HMRC. Don't get into trouble with HMRC, please. They will treat you as if you're guilty until you prove you're innocent. Okay, so don't get into trouble with them. So before we start giving you some good information, there is actually a good line that Gordon Gekko spoke in that movie, Wall Street. And that is, the most valuable commodity I know of is information. So before you start, before you do anything, get as much information as you can. Understand what you're going to do before you launch. So, being a sole trader, there's lots of different ways you can set up your business. Being a sole trader is one of them. There are 3.7 million sole traders out there. Ear, nose and throat specialists, nail technicians, app designers, all sorts of people who are working for themselves. You're not alone. There's millions of people doing this. It's very normal and it's very mainstream. 60% of new businesses are set up from home. You can set up from home tomorrow, and I'll explain a little bit more about that later. But you can set up from home. There's consultants, there's mail order specialists, there's journalists, all sorts of people working from home as sole traders. It's not unusual. In a nutshell, if you're going to be a sole trader, it's much quicker, easier, simpler than a limited company. You could make the decision today, but you are personally liable if things go wrong. And that's the thing you need to know. So if I was this, nose surgeon and I accidentally operated on the wrong nostril and somebody got quite upset and wanted to sue me, they will sue me. They will sue me and my family and my money. So you are going to be liable. Also, if you start to earn a decent income, really it's not the most tax efficient way to go. But if you're going to start, perhaps sole trader is best for you because it's nice and simple. A limited company is definitely the most tax efficient way that you can run a business. Basically, the government takes less money off you if you have a limited company. Now, I want to explain this thing about limited company because I never understood it, even though I had 2 or 3. Even then, I didn't quite get the concept. It's a blinding, brilliant concept, limited company. Now, if you can imagine it, some hundreds of years ago, somebody decided that the whole of planet Earth was being held back because amazing people with great ideas, as soon as they got too big, the risk became too much. And so they didn't go any further. Because if some idiot doesn't pay their bills or whatever it might be, it means the food is being taken out of your children's mouths because you can't pay your bills. So obviously that was holding people back. The limited liability structure means that the company you set up is actually a legal person. It's a person, and it's a person in its own right, and it's a virtual person. Okay, very different from a sole trader. So let's say you call this person Doris. Right, it's easy for me to explain. So you set up a person called Doris who has a legal identity. She is the one who employs your people. She is the one who issues invoices. She is the one who pays the bills, owns the furniture, owns the computers, owns the cars, owns the building. Okay, she does that. Doris pays you even though you created her. And you can't nick money off Doris unless it's a business expense. Okay, it's her money, it's not yours. And she legally exists in her own right. But if your Doris company runs into trouble, your personal finances, your personal financial liability is completely limited. That means someone who's dealt with Doris can only claim against Doris. They can't claim against you. And that's where you protect yourself. So your personal house, your car, your kids' mouth food is protected. It's bloody genius, frankly. So once you get big, it may be that you want to create your own company, your own legal person, your own Doris, because actually things are starting to get complicated, things are starting to get risky. If you do set up a limited company, it does take a bit of time. There's far more paperwork, but if you get to that stage, it might well be worth it. We'll come back to limited companies in a minute. So, trying to make up your mind, sole trader, limited company. Let's have a look at the benefits of a sole trader. If you're a sole trader and you're running your own business as an individual, your customers are paying you directly. So, as an example, somebody wants a haircut, you go around their house, give them a quick trim, they pay you, you take that money and you put it in your pocket. That's how it works. All you have to do is keep records of what is coming in, so what you've pocketed, that's your income, and what you've spent on scissors and shampoo, whatever, that's your expenditure. That's all you have to do as a sole trader. It's your personal income, and you don't have to declare the profit, you don't have to declare the difference until the end of the year. And you have to do that on a personal tax form, just once a year. So this means you don't have to pay yourself through payroll, you don't have to pay yourself through PAYE, you don't have to do any of that nonsense. All you have to do is collect the money in, pay the money out, look at the difference, and then at the end of the year, HMRC tax you on the profit that you've made. Okay, it's very, very simple. The law doesn't distinguish between you and what you're doing, because it's just personal, it's just you. Whereas, if you're a limited company, it's Doris owns all that money, okay? There are benefits to being a sole trader. You've got simple accounts, and it's not necessary to have a separate business account. So don't listen to anybody who says it is. We would advise it, because then it's nice and clean and separate, but you don't have to open a separate business bank account. And if you work from home, you'll probably be able to offset some of your home costs without too much trouble. You'll still have to do an annual personal tax return, I'm afraid. But the great advantage of being a sole trader is that nobody can tell you what to do. Nobody. If you make a decision on what shampoo to use for your clients, nobody else has got any bearing on it. So you can do exactly what you want. There are disadvantages, and the key disadvantages, of course, is that you're liable if anything goes wrong. And in most cases, not perhaps when you're very small, but certainly when you get bigger, you'll end up paying more personal tax and national insurance than if you had a limited company. The other thing I would say is it's quite hard to sell a sole trader business. And the reason for that, if it's something you want to do later on, is that it's hard for somebody to distinguish between you and your personal, your personal assets. So actually, what is it that they're buying? Okay, so that if you do intend to sell at the end of the day, it might be better later on to become a limited company. So that's the advantage of sole trader, nice and quick, not very complicated. Limited company. So as I said, this is an organisation that you set up to run your business. It's a Doris. You must keep your personal finances separate from your business finances. A lot of people don't do that, and you absolutely have to do that. After paying corporation tax, any profit made is owned by Doris. It is not owned by you. Please get this in your head. You need to understand it. And many people get confused by the fact that even though they started it off with their money, they mortgaged their granny, they did all that sort of stuff to set it up, it's a separate entity, and the money in it is not yours, it's Doris's. Keep that separate. Doris can give you a payout of the profits, that's no trouble, but actually, she needs to share that with profits with all shareholders, not just you if there's more than one, and it's a separate thing from your own money. Okay. The benefits of a limited company is it has its own legal identity, as I said. It has owners, so you might have a share of the company, but you might give some shares to other people. And your liability is normally just based on what you've put into the company in terms of your shares. So the liability might be restricted to £1, for example, or £10. But please remember, if you've taken out a personal loan with the bank, so in your own right, to help the company, you're still going to be liable for paying that back. But anything inside the company is all sort of ring-fenced. I do think there's an element of prestige in forming a limited company. So banks and other businesses might take you more seriously. It's stupid really, but actually I do think that happens out there. And you could raise funds if you've got a limited company. So you could sell some of the shares. Can't really do that if you're a sole trader. There's also opportunities to give shares to others. So if you wanted your business to continue through the family or something, that structure makes it nice and easy. And there is much more opportunity to minimise your tax and your national insurance payments. Disadvantages. One thing that people don't realise is you have far less privacy if you're a limited company owner, because in Companies House you have to give the identity of the shareholders. And if you've got a very embarrassing middle name, that's going to be at Companies House for sure. And also if you don't tell anybody your date of birth, that's going to be at Companies House for sure. And also your address is going to be on there. So it's actually quite a public thing to do. Your admin expense is going to be much higher. You're not really going to be able to get away without having an accountant, possibly a lawyer, things like that. And again, we were just discussing how expensive doing all that sort of stuff is. So it is a bit more expensive, but you do protect yourself. Let me just tell you what your legal responsibilities are. As a sole trader, you need to decide what to call yourself. You can call yourself anything. I would suggest that you can't probably call yourself Harrods because there's a trademark on that. So go and check trademarks for names first. Don't choose something that already has a trademark. But other than that, you can call yourself anything. And another piece of advice, I'd certainly check domain names. Is the domain name free as well? Because you might end up calling yourself something, and then of course, that's weird, and then of course there's no domain name available. Please will you get business insurance? And again, I'll talk about that in a minute. Get business insurance to protect yourself. It's not a lot of money as a sole trader, it's about £120, £130. Check that you can work from home. If you don't have people working in your house and you don't have clients visiting you and you haven't changed your house in any way, you won't have business rates. You can just operate from home. It's fine, it's no problem. If you've got stock at home though, you may want to tell your insurers, because if you lose it, you won't be able to replace it if you haven't let them know. The one thing you do have to do is you have to register with HMRC inside 3 months of starting your business. So make sure you remember to do that, and you'll get fined if you don't, because that's what HMRC do. You may wish to set up a bank account, separate one, but you don't have to. Your legal responsibilities are you're responsible for the losses, and anybody can make a claim against you if they get hurt by your services or anything like that, hurt on your premises, and you have to keep records of your spending, what's coming in and what's going out. Tax responsibilities, you've got to register for self-assessment, which is a 1-year thing that you need to do. And again, you'll get fined if you don't do that. And you have to pay income tax and national insurance on the profit you make, providing it's over a certain amount of money. You have to pay national insurance on your income. It's pretty easy for somebody to set it up for you. It's £2.75 a week. If you're over 5,500 or something pounds a year profit, get somebody to help you with those things. But that's all your legal responsibilities are. Let's have a look at your legal responsibilities as a limited company. Again, decide what you're going to call yourself, get your business insurance, and get a business bank account. So those are the things that you need to do first. Decide how many shareholders you want. How many shareholders do you want? You can have one shareholder and it can just be you. That's absolutely fine. But is there anybody else that you wish to share with you? Can I just stress that if you have shareholders, they own the company. Okay? They own the company. Shareholders own the company, all of them. If you have a majority of shareholders, and let's say you've given your mum 30% and your husband 30% and you've got 40%, you're in the minority and they can make decisions against you. So please make sure that you're the majority shareholder, because you can make all the decisions that you want to. Every year you then decide with the shareholders whether you want to pay out profits to the shareholders. Okay, and that's what people call dividends. So do you want to share those profits out? And you have to share them out in the percentage proportion that the shareholders own. So for example, if you made £10,000 profit, you gave your granddad 20% of shares, you're going to have to give him £2,000, I'm afraid. That's how it works. So be careful with your shareholdings. A lot of people set up and don't realise the implications. There's a difference between company directors and shareholders. So company directors are people who are charged with running the company. They do have certain legal obligations, so they have to make sure that company records are being kept properly, they have to report changes to Companies House, they've got to make sure that the figures are a fair reflection of the company, but they don't own the company. So if you're a company director, you have got legal responsibilities, but it doesn't mean necessarily that you're a shareholder, and those two things are different. How do you set up a limited company? Basically, you register it at Companies House. They call it incorporation. So you incorporate it at Companies House. You get a little certificate that you can hang on your wall, a certificate of incorporation, and this tells you that your company legally exists. And it shows the company number and it shows the date of formation. But every financial year you have to do a whole shed loads of things. You've got to do your statutory accounts, so that has to be sent to your shareholders and it has to be sent to Companies House. You have to include a balance sheet, notes about the accounts, a director's report, and a balance sheet is just a statement of all the things that you own and the value at a certain date. So in my very uncomplicated world, a balance sheet and your company accounts, the profit and loss is like your bank account, what's gone in, what's gone out. Your balance sheet is if you decided to move to Australia tomorrow and you sold everything you had, your house, your car, your granny, your budgie, your iPad, that's the value of all those things if you decided on that day to liquidate everything and go away. So you've got a balance sheet and your profit and loss. If you're a director of the company, there's a bit of a tax debate about this, but if you're a director of the company, we would advise you to register for self-assessment and put in a tax return. The revenue prefer you to do that. So even if you're on PAYE, you don't get any other benefits, you should still do a self-assessment tax return. Now my advice is, all that stuff is such a pain in the neck. Go and get somebody to do it for you so you know you're on the right side, you're doing everything right, and you can concentrate on your business. What can you claim? Business expenses is a question we get asked a lot. So there's a difference between, if you're a sole trader, for example, what is it that I can claim? Phone and office costs. If you've got a mobile phone and you've got your own mobile phone and you reckon you do 70% business calls on your mobile phone and 30% private, just put in 70% of your bill as business costs. Just make sure it's fair and reasonable, and HMRC are fine with that. You can put a business proportion for your computer costs, for your rent, power, water. Just make sure it's reasonable. Your broadband, your home phone, anything like that, just make sure the proportion is right. If you can't be bothered to work out your rent power rate, the proportion of it, which I don't think I could, you can claim just a flat rate of £4 a week. Okay? If you only use your office, let's say, not for doing business, but for just doing your invoices and doing a little bit of admin work, you can claim £2 a week. So you can put that sort of stuff in. Of course, you can claim business stationery, postage, business travel, bank charges, all that sort of stuff. But other things that you may not know, if you get a professional journal that you get, a magazine or something like that, you could put that in. And if you've got a uniform, you can claim for that. But don't buy a lovely Armani suit and claim that as a uniform unless it's got your company logo on it. They won't accept it. And then tools, equipment, anything like that that you use in the case of your business, you can claim for. Now, I think probably the worst thing, the worst nightmare bureaucratic thing you can do in your business is employ somebody, because personally I think that the things you have to do when you pay staff far outweighs the stuff you have to do with HMRC and Companies House for just running your business. And don't forget, you can take on staff if you're a sole trader, or a limited company, and do that both ways. You've got to register as an employer with HMRC, you've got to do payroll, you've got to deduct tax, you've got to deduct national insurance, you've got to let them know if there's a change in circumstances, you've got to know about student loan repayments, pension contributions, sick pay, holiday, maternity leave. Don't forget there's a national minimum wage rates that you have to pay, and also there's the new pension burden that businesses have. Please go and get somebody else to do payroll for you. It's just a nightmare. Quick one on VAT. Again, VAT, you have to register for VAT if you have income of more than £81,000 at the moment. You don't have any choice. So basically, if you go over that threshold, the government want you to collect tax for them because they don't want to do it. So they put the burden on you, and you have to charge VAT on top of what you do. If your customer can't claim VAT back, so let's say you've got a shop and it's just a private person, that makes your goods 20% more expensive generally, depending on what you're selling. If you're selling and you're a consultant and you're selling to businesses who can claim VAT back, they don't care that you charge them VAT. They're not bothered. So VAT is a big decision depending on your own circumstances. Again, it's also incredibly complicated. So the usual standard VAT rate is 20%, but for example, a cake is 0 rated, 0% VAT, doesn't matter what your turnover is, even if it's covered in chocolate. But if you've got a biscuit and it's covered in chocolate, that's 20% VAT. Who knows why? We have no idea. If you sell books, they're VAT free. If you sell ebooks, they're not VAT free. If you sell a pasty and it's hot, it's 20% VAT. If it's cooling down and it's meant to be eaten cold, it's 0 rated. So the whole thing has massive anomalies. And again, I'd advise you to get somebody to work out all your VAT for you. Very, very quick one on business insurance. Public liability and products insurance, you don't have to have it, but you can get it as cheaply as about £100 a year. If somebody uses your product and hurts themselves, slips in your premises and claims against you, you need this insurance. Just get it, it's worth it. If you employ somebody, you are legally obliged to have employer's liability insurance. However, if you just employ yourself and maybe a close member of family, then you don't have to. Okay, so it's just a sole trader, you're just employing your mum, you'll be fine. But other than that, you must legally have employer's liability insurance. If you're a consultant and you're giving advice to people and that advice goes massively wrong, they may claim off you. So if you're in that type of business, it's probably worth having professional indemnity insurance. So, as a refresher, you need to decide whether you're sole trader or limited liability. Please, please understand your legal and tax responsibilities. And again, if you go onto the riftaccounting.com website, it's all there. Get to know what expenses you can claim. Subcontract work. Are you going to do that, or are you going to put people on the books? Again, another big decision. What about VAT registration? Get some advice on that. And please, please get business insurance in place. So, I thought that meant fish of the day. Somebody told me that meant fish of the day, but it doesn't. It means seize the day. So, this is my final bit. If your heart is desperately trying to rule your head at the moment, if you keep thinking and dreaming about your business, if you are utterly, utterly passionate, if your friends and family think it's a good idea, if you're an adventurer, if you're an explorer, if you're a madman, if you're a genius, if you work all day with dinosaurs who are out of touch, don't be frightened. Don't be frightened. It's one hell of a journey, but I think it's definitely worth doing. But please can you remember these 4 things, because this might trip you up. Do your research, make sure people are going to buy what you do. Don't be fooled into going for turnover, go for profit. Make sure you constantly understand your figures and can see them and you know what they are. And don't get into trouble with HMRC or Companies House. HMRC always win unless you owe them millions, in which case they just take you out for dinner. And then one final thing, this is something I'm very passionate about. Just finished. So final thing that I'm really passionate about, if you've got advisors, so if you've got lawyers, accountants, bank managers, whatever, never ever allow them to talk to you in jargon, please. Don't put up with it. Never ever let them talk you into something you don't understand. If someone speaks in code and someone uses jargon and someone uses gobbledygook, if they don't answer your calls or your emails quickly, if they make you feel small, even though you're paying the bill and you're the client, they're showing off and they're an arrogant arse. Sack them, sack them, sack them. It's their job to explain things clearly. It's their job to make sure you get it. It's their fault and not yours if you don't, okay? I would say sack them. Sack them, sack them. Go and get somebody who can help you. Go and get somebody who does actually care about you. No question you ever ask to do with your business is stupid. No question ever, ever, ever. So ask those questions. It's your business. Make sure you ask those questions and make sure you know the answers. So I wish you luck on your intrepid journey. That's it.